This is a company question. This is Hill Limited. It's the 2019 pre, and we're just looking at one of the adjustments here. The adjustment we're looking at is during the year, a storeroom which cost 20,000 and stock which cost 12 was destroyed by fire. A new store was built by the firm's own workers. The cost of their labour, 28,000, has been treated as a business expense, and the materials costing 62,000 were taken from the firm's stocks. Those two lines are important. The insurance company has agreed to contribute 30,000 in compensation for the fire damage. No adjustment has been made in the books in respect of the old store, the destroyed stock, or the new store. Nothing has been entered. Okay, so a couple of things going on here, and there's a lot of accounts that are being affected, but the first thing you need to do is identify which accounts are at play here. So if you start off from the start, it says a new store, or a storeroom which had cost, so basically a storeroom which was worth 20,000 was destroyed by fire. What's a storeroom? It's buildings. So you straight away you need to realise that there was 20,000 worth of buildings that are destroyed. That means those buildings are no longer of use to the company, and we need to take them out of the buildings account. So buildings, 110,000 was my balance. I can see that, sorry, 120, I made a mistake there. 1,250,000 was the balance. When we're doing something like this, we are dealing with the cost figures. Do not take the net book value figure. We're dealing with the cost figure for buildings, 1,250,000. A storeroom which cost 20,000 was destroyed. So destroyed, and I'm going to say 20,000. That 20,000 is obviously a negative figure, as it is destroyed, it's gone. Stock which cost 12,000 was also destroyed. So I'm going to go over here, stock which costs during the year. If I'm talking about stock during the year, closing stock is literally only some workers going into the warehouse and counting up how much stock there is the very last day. So every time it's during the year for stock, we think of the purchases account. So purchases, 1,460,000. Purchases, and the figure is 1,460,000. 12,000 was destroyed by fire. That 12,000's got to go. So destroyed, 12,000. Okay, so 12,000 was destroyed. So next part of the question I'm looking at here is a new store was built by the firm's own workers. So the firm's own workers went off and built a new store. The cost of their labour, 28,000, had been treated as a business expense, and the materials costing 62,000 were taken from the firm stocks. If we want, actually, we can just kind of close off this side of things first, which is the next line. The insurance company has agreed to contribute 30,000 compensation for the fire damage. So if we just deal with the fire damage first, obviously the worth of our assets, we have a fixed asset and current asset here, essentially with stock, 20,000 and 12,000. So they're two things that the business owned and they're destroyed. 20,000 and 30,000 together. So this account I'm going to call loss by fire. So I had stock worth 12,000, and I had store buildings worth 20,000. So they were both destroyed. They were destroyed, and I received compensation. They're both destroyed. They're both gone. Doesn't really matter which one is in brackets. You just need to realise that you receive compensation for assets worth 32,000. The compensation we received is 30,000. That 30,000 is a current asset. Do not forget to add that into your balance sheet, because it is money the insurance company has agreed to pay us. They've agreed to pay us, which means this money is owed to us in the future. So we have minus 32,000, and we received 30,000. So that will be minus 2,000 left at the end once I take away the 30,000. Regardless of whether you put these as minus or this is a minus, it's the same thing. We know at the end that we received less than what we should have. It was worth 32 and we received 30. So we have a loss by fire, and that's an admin expense. So that's going into our profit and loss account. Um, Dealing with this part here, dealing with the business expenses that we've kind of treated for the buildings. So a new store was built by the firm's own workers. So we got our own employees to build us a new building. Cost of their labour was treated as a business expense. This is just something that you just have to understand about accounting for equipment or for buildings or whatever. When you increase the value of a building, which you are, by the way, if you pay someone to build something in a building, or you use some materials for a building, you've invested in the building. So the buildings account goes up. You do not increase the expenses. Basically, these are treated as increases in fixed assets for the company. That 28,000 should go into the buildings account. It should not go into an expense account, which was the salaries and general expenses, because it's labour. So it should not have gone into the salaries and general expenses account. Those wages should not have been treated as salaries. So if I look at the salaries and general expenses, and general expense also has suspense, which I've dealt with in a different account. The figure here is 245,700. I've dealt with that in a separate video. There's more to that adjustment, but I'm just going to focus on that number for now. We've included 28,000 of labour in this figure. That should not have gone in there. It should not have been treated as a business expense. So that figure has been increased by 28,000, and it shouldn't have been increased. So I'm going to take out, so less buildings, because that 28,000 was included in salaries and general expenses, and it should not have been so. So 28,000 out of this account here, and I'm going to do the exact same with the next account, because this account here we have, the second one we have here is that we have materials costing 62,000 were taken from the firm stocks. So they were taken from purchases because it happened during the year. They shouldn't have been. Anytime you increase buildings, these materials were used to increase the value of the buildings, then that goes into an asset account. It does not go in as an expense. So I'm going to say less buildings here, as the 62,000 was used to increase the value of buildings. It should not have come out of purchases. 62,000. So I'm going to put that 62,000 in here, and now I need to look at the buildings account. So for the buildings account, we have had 28,000 taken out of salaries and general expenses. We've had 62,000 taken out of purchases. I'm going to add both these figures in here because that's where they should have gone. This is now increasing my buildings. So buildings, for wages, for buildings, say wages, salaries and general expenses is 28,000. And we have stock or purchases, whatever we want to call it, it's 62,000. All we're doing basically is increasing the value of the buildings. So we've taken out the two things that were entered as business expenses, here and here, and we've added them into buildings. And that's the end of that.